The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for kicking off your trading week right here at TFNN. I heard some sound there. We good? I think we are, Al. Just let me know. And we kick things off. Sorry for that. I had something going on on my computer. But nonetheless, we got markets picking things up in negative territory. Thank you, Al. We got the 10-year, 4.77% right now. And we got markets trailing off to negative territory with the S&Ps off by 45 points, extending the gains we had last week. And I'm going to kick things off with some volume and with the S&Ps and the indices, okay? And you're talking about here, what's going on? Do it that one, right? Zoom it in. It's not focusing. What's going on? All right, there we go. Point being, escalating volume to the downside, folks. You're talking about it. You go back to December 18th when you get that pullback, okay? You trade from 6,150 down to almost 5,900 in the S&Ps. You do 2.5 million shares. You come into holiday trading, and I was talking about this in Market Insights and on this program, okay? Very tough to decipher sometimes, holiday trading, whether light volume is meaningful, but volume is volume. My dad would say it sometimes, right? Volume is volume. And the point being, we only got a reprieve to the upside on dramatically lighter volume. One of those days being Christmas Eve. Okay, you're talking about 582,000 shares traded on Christmas Eve, a shortened session. Nonetheless, you trade higher. What happens? We pull back again. January 2nd, you trade lower on 1.7 million shares. This is on S&P futures. You trade higher, and then we rip lower, and on Friday, you do more than 2 million shares in the S&P, and today we're picking things up in lower territory. NASDAQ 100, you're now below the highs of July. You are now also coming into, we're talking about trading at 20,784 right now. We're basically prior to the election in the NASDAQ 100 now. Forget about the Trump bump. It's gone in these markets. Politics aside, and listen, Trump doesn't even take office for a week, okay? But markets are forward-looking. You're going to say, not fair, he hasn't even taken office. Expectations sky high. He comes into office with the stock market at all-time highs, and what do we have? We have yields higher. We have stock market lower over that time, and yields are weighing on this market, and maybe that's the beginning. We got dollar strength as well. You jump over the dollar. How about 110? Yeah. Now listen, we'll see where we go. We'll see where reality meets the rhetoric of a campaign trail beginning in 1 week from right now. We get some confirmation hearings going on this week. That's not policy, though, okay? But the market placing their bets. There's the election, folks. Okay, so what do we got? We got the dollar going from 104 to 110. We got yields pushing a 14-month high, okay, as we approach 4.8%, potentially on our way to 4.5%, and we now have growth stocks below where we were coming into that, below the highs of July. Okay, and you got the S&Ps approaching that level as well. On a futures basis, you're talking about 57.33, but on a cash basis, I think you're almost right back to that level. Same thing happening with stocks. S&Ps, no Trump bump, back below that price level, and you're talking about giving up, what are we talking about here, 350 points, almost a 5% pullback from that spike high December 16th. Just keep your eye on it, because there's a rollover going on in these markets right now. Yields paying attention, and we'll see where we go from there. Dow only off 93 points or 0.2%, and the Russell, though, taking it on the chin as usual, off by 1.2%. You back it up to the July high. We were at 2,300. The Russell just gave up 300 points, which you're talking about a 12% decline from where we were November 25th. Russell very open, very vulnerable, should say, to higher rates. And you look at the Russell, you're now back to where we were in the Russell when Tommy was born. How about that, right? almost 4 years ago. February 2021 on Russell 2000 prices, man, with yields approaching 4.8%. But boy, dollar and yields, that's going to be the story. Now, we get PPI out this week. We get CPI out this week as well. We get bank earnings kicking things off. So we jump right into it, man. The first quarter in 2025 kicks off. Now, back to a little bit of a shorter term chart. Let's go to the 3-year. I like the 3-year because that encapsulates the high we had. No, excuse me, not the monthly. I want the 3-year. There we go. That encapsulates the high we had back in 2022. Now, I was watching Bloomberg earlier this morning, and they say on Bloomberg, right? They say in this chart in particular, they're saying, man, we're coming back to the highs of 2022. Remarkable that we were in a hiking regime back then. And then they say, and now we're in a cutting regime. And my ears perked up. I said, no, we're not. We're not in a cutting regime right now. That's the whole point. We might have been. The market might have thought we were in a cutting regime back in September. Okay? But the reason why we are here is we are not on a cutting path right now. Period. End of story. Things can change. Data can change. You better follow the momentum in this market, folks, because just that, I mean, very similar to what was going on in that acceleration in 2022. If you recall, the Fed was the first game in town, right? We started hiking in March of that year. You had the markets pull back dramatically. Other economies across the globe not as quick to begin tighter monetary policy, to hike their policy rates as well. We were the only game in town. Everybody flocked to dollars to access U.S. yields that were climbing versus the rest of the world. That recalibrated, but guess what? It's happening again. We see it across the globe right now. Okay, we have right now American exceptionalism, and that's when it comes to the economy, and there's no denying it, folks. Now, we come into earnings season. It's going to be an important one. We'll talk about that, but don't think this thing can't push 114 on the dollar. Okay, don't think it can't happen. We just traded on December 2nd from 105.50 to 110. Okay, that was 6 weeks. You make that move again, and you're pushing the highs just that quickly. That's how close we are. And we're not even at 5% right now. And it looks like this market can handle 5%. Yeah. You see the action, right? Actually below where you were on price level on the 10-year. Okay. And I have 475 up there. I got to update that. I think we're pushing about 4.77, the yield on the 10-year this morning. But on a price basis, you back it up to April of last year, just below the lows of 107.04. We're at 107.14 right now. And then you have the low hanging out there of 2023 at 105.10. Now, folks, do you remember what the stock market was trading at when we had yields where we were? I don't even want to start that conversation. October of 23, 4,100. This market is up 1,700 points, driven by earnings, okay? But you better believe that yields are going to weigh on this only because, or mostly because, there had been a thought in this market that we were coming out of that. Right? There had been either the head fake coming into 2024 or that real acceleration we saw where you saw yields drop dramatically. I think the 10-year hit almost 3.6%. And you're telling me that we've had yields do what they've done from September, and you're talking about holding up in these markets right now at a pretty lofty level? We'll see. It's going to be a wild day in the markets, folks. We got 5 full days of trading this week. Stay tuned. I'm coming back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got about 11 minutes to go until the opening bell, and markets picking things up in negative territory. Now, it's interesting. This is the first week in the last 4 weeks. I had to look at the calendar again, right? You had Christmas week with a 4-day trading week, New Year's 4-day trading week, last week 4-day trading week for Carter Memorial. We have 5 full trading days this week, and then next week we have a shortened holiday trading week. We're off a week from today, January 20th, for Martin Luther King, which is also Inauguration Day, falling on the same day this year. So that's going to be 4 out of 5 weeks. You got 4 shortened trading weeks. Interesting as we come into quite a chop with negative territory into this market. Nonetheless, we take a look, and we got the S&Ps trading at 58.24 on a futures basis, as I mentioned, almost back to July of last year, just like that. Now, that's right at the tippy top of quite the escalation from April. But you see the volatility, and the last time, you see how quickly this volatility, that was the taper, that was the rollover, right? August 5th, when we all came back on Monday morning and markets were down almost limit from the yen rollover going on in August. Now, remember, okay, what they were worried about then, which is remarkable, was a whole regime change of yields. Right? There's the August acceleration to higher price, lower yield. And look at the recoil we've had since then. We're now right back to the lows we were in April. We're pushing 5%, but it seems like it's higher for longer. And there are articles everywhere, whether you're talking about Bloomberg, Journal, anywhere. Just look for a second, okay? Different articles. Now, the fires are everywhere, deservedly so. We'll talk a little bit about those. My goodness, okay? But you jump over to Bloomberg, Treasury ripoff. Treasury sell-off ripples through world markets. You have the big take, which I'm going to talk to, just talking about soaring global bond yields are a warning for 2025. U.S. stocks set for more losses as rate hopes fade. Okay. And then you jump over to the Journal. That's just the front page of the Bloomberg.com. And then you jump over to the Journal. Investors hope earnings can revive faltering stock rally. You could blame the rally on yields to a certain degree. Why bond yields are surging around the world. Okay. Financing is what Goldman's looking for in the future. Financing. Yields. It's everywhere, man, which is remarkable. Now, global bond tantrum. Wrenching and worrisome to start the new year. You better have the spikes up on your back, folks. Okay. 10-year yields, federal funds rate, the conundrum that the Fed is in. We're all aware of it, right? The rate on a 10-year note alone has soared more than a percentage point in 4 months, and now within that 5% number. Now, jumping around, okay. There's our yields. You talk about a recoiling, okay, 3.6 to 4.8. We're above where we were last April on yields, which is remarkable. And it seems like we're on our way to 5%. And there is nothing getting in the way of this right now. Okay, you see the action in terms of what's going on in markets. And then you go forward, which is interesting. We make the leap to earnings, okay? Here we go. So, from the Journal, investors hope earnings season can revive faltering stock rally. Now, we get inflation data this week with CPI. And then you go right into bank earnings, which kicks off the season. With the Fed unlikely to cut interest rates as quickly as hoped, corporate earnings growth becomes even more critical. Yeah, yields are going to be a weight. They're not going to be a wind at your back in this market as many had anticipated. Okay, and at the same time, this is what has saved this market, deservedly so. It's only about earnings. That's what drives everything. Okay. S&P 500 price earnings next 12 months. Look at that number, man. It is priced in. You were getting quite a bargain, okay? Quite a bargain a couple years ago. Not the case anymore, man. You're getting 22 times the next 12 months forward earnings on the S&P 500, and that's what this market has to contend with as we come into earnings season. Yeah, we got JP Morgan, Wells Fargo, Citi, BlackRock out this week as well. Analysts expect companies in the S&P 500, 12% jump in profits from last year. That's going to be the biggest year-over-year gain since the fourth quarter of 2021, but down from 14.5% that the market was looking at late September. Now, keep in mind, market is expecting one thing. What's the market expecting? The market right now is pricing in the S&P 500 to have a 12% jump in earnings, which would be the best number since the fourth quarter of 2021. That's where expectations are. What are the odds that the market does better than that in this environment with a super strong dollar and higher yields, or what are the odds that the market fails to keep up with high expectations for a basically blockbuster earnings season, right? Yeah. What are we going to get with tariffs? Is that going to weigh on the future expectations? And there's your estimate, okay? We saw gangbuster numbers coming out of COVID, but pretty remarkable that in the face of this economy we're looking for, and that's where equities are priced. So if you're buying equities right now, are you looking for greater growth than what the market's pricing in? Because if you are, the market's pricing in a number that we haven't seen since the end of 2021 coming out of COVID. If you're buying equities right now, you're hoping, or you're thinking, that that's going to be a bigger number, and it may, okay? But you better believe there's a risk to not delivering when you're talking about delivering earnings that this market has not seen in almost 4 years, okay? S&P 500 recently trading about 22 times, like we talked about, projected earnings over the next 12 months above its 10-year average, which is at about 18.5. This is at the same time that we're adjusting to higher yields. Contend with that one, okay? talking about the big tech companies, right? The Magnificent Seven are expected to post a 22% jump in fourth quarter earnings. That compares with an 8.7% rise from the other 493 companies. You better be diversified if you don't want to take any pullbacks, because that says it all right there, right? We have extreme volatility, and we've seen it in the markets, okay? We've seen it in the markets. I mean, you got Tesla down another $5 today. $12, excuse me. From $394 to $382. What was I looking at? Something was just down $5 today. NVIDIA was down $5. That's what it was. NVIDIA from $136 down $6 now. You're going to open under $130 on NVIDIA. You're back to prices on NVIDIA that you were almost trading at in June of last year. $125.59, you're at $130. Now, you could make the case that it's about time you get a consolidation, right? That was the run, man. That was the run. June of last year to $140. We're going to open at $130 right now. We got the NASDAQ off 1.2%. We'll finish this conversation up when we come back for the opening bell. Don't go away, folks.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. Educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. S&Ps kick off the trading week down 0.8% or 48 points in the red, trading at 58.17 right now. NASDAQ 100 off 1.2%, off 246 points. You see the overnight lows at about 20,694. We're trading 20,765. Dow only off by about 0.1% or 56 points in the red, and the Russell taking it on the chin, off 1.2% or 25 points in the red right now. Pretty interesting. You see the Russell off a similar percentage point as the NASDAQ 100, but nonetheless, we got action. Bitcoin trading lower as well. We almost hit an 89,000 price handle. We're at 91,000 in Bitcoin, down $4,000 right now. And how about crude, man? We almost hit 79. Higher prices coming at you right now. Crude breaking higher. Yeah, we're at 77.50. Just like that, you break through this level, 82.50. Crude bumping around in about $5 trading ranges from 67.50 to 72.50. 77.50 is the next level. You back it up to the highs of October, 78.46, and what did we just hit? 78.58, just over that level. We'll see if it rejects that high we had in October. And boy, it was quite a decline from where we were at that point, but nonetheless, crude up by more than $1 this morning. Gold trading lower, off by $29 now. Dollar strength hitting gold this morning as the dollar up 819 ticks. We hit 110 this morning. We're at 109.90, we'll call it right now on the dollar. And you jump over to yields off of the lows there, but we're still talking about a 10-year yield. We're sitting at 4.77. 4.77. Pretty much where we were on Friday, but a digestion of the jobs number, higher yields coming at you, dollar strength, all of those holding. And guess what? Markets lower, holding as well. You're talking about a NASDAQ 100 that was at 21,376. Okay, you just wipe out 600 points. We're off almost 3% from where we were trading Friday morning in the NASDAQ 100. Let's jump around to some of those equities. Apple shares, that's going to weigh on the market, down more than 2% to kick things off. NVIDIA shares down 3.6%. Microsoft down 0.5%. Amazon down about 0.4% right now. Google shares kick off the week 1.5% in the red. Mentioned Tesla off about 2.5%. Right across the board, man. Salesforce, we jump around off about 0.4%. We check out some of the banks. Now, here we go. Earnings season kicking off. We jump over to the Analyze tab. And yeah, you're talking about an $8.28 move priced in. You got JP Morgan coming out this week, and you're actually positive by about 0.5%. Wells Fargo in the green by 0.2%. Citi negative by 0.2% right now. And we jump back when we were talking about earnings. So there's a concentration, obviously, in the Magnificent Seven, right, where we're talking about those equities in particular are looking for a 22% jump in the earnings that we're starting right now. The rest of the market, 493 companies, looking for 8.7% rise in their earnings. Okay. Analysts expect financial companies, the banks, they kick things off. Look at the expectations in the banks. Now, it's reflected in their share price, okay? But you're talking about financial companies looking for year-over-year earnings growth of 40%. Communication services companies next at 21%. The energy sector is going to be the biggest decline at 26%. And Keith Buchanan, not familiar, but nonetheless, I think he sums it up well. And how the healthy next step for this market is for everything, earnings growth, but also valuation to spread. Meaning it can't just be in these 7 companies that are supposed to crush it with 22% jumps in fourth quarter earnings, while the rest of the market sits at a sub 9% growth for 493 companies. And we have equities priced for almost still perfection at these price levels, folks. Okay? You back things up on a longer term basis, you got to remember, we just completed an A to B, C to D formation where the A to B leg was 10,484 points in the NASDAQ, and we did 2 of them. Starting at the COVID lows of 66.28, you pull back to 10,000. What's that low? 10,484. Excuse me, 10,139 was the leg. And we're just sitting right there, okay? As in, not outlandish to expect some type of a pullback, folks. The last time we did a 10,000-point leg in the NASDAQ 100, what did we do? What did we do? We gave up 6,000 points over the next year, which at that time was almost a 40% pullback. So don't be surprised if this market needs to digest. A higher yield of 5% doesn't mean the market's going to come crashing down. But man, you want to get your spikes up, okay? And you should have your spikes up on your back. 382 brings us down to a 17,000 handle, and that's just from the straight trip that we've been on since basically the beginning of 2023 when we had the NASDAQ 100 trading at half the price we were at right now. A 382 retracement, healthy pullback in a healthy market brings you down another 10% from where we are right now, almost to the tick. So you better be planning for that to be something that's potential in this market as growth stocks adjust to a higher yield in this market going forward. And we'll see where the Fed goes from there. All right, what else we got going on in this market? We talked about earnings. Whew, this one's a tough one, man. These fires, I can't help but watch and hope for the best. These winds, right? The Santa Ana winds. My goodness, I was learning all about low pressure cycles go counterclockwise. High pressure cycles go clockwise. When they both meet, that'll really ratchet up the winds in between as you have two different clusters of winds going in the same direction. But then you read stories like this. Now, boy, you talk about it, right? And, you know, it's a shame how everything gets tantalized online, right? It becomes the haves, have-nots, the rich in L.A., all this stuff. That stuff aside, okay, you see many stories like this. And what I thought about of reading this story is diversification, especially in positions like this, okay? And what's tough is you don't see the type of risk that you're prone to in this area, okay? But they go over different areas, okay? You go over, I believe it was this woman, Sylvia, not sure, but nonetheless, they talk about, you know, you purchased almost an $800,000 home in 2009. It's worth $1.6 million right now. Guess what, though? A lot of that is in the land that can change dramatically, okay? Now, I bring this up because we saw this happen in St. Petersburg, Florida, many areas of Florida, okay? There was a complete repricing. There is a complete repricing going on in the Florida market when we got hit with two storms within 3 weeks. If you own a plot of land that just got flooded out and destroyed, the value of that land has been repriced dramatically. Now, yes, that's had a carryover effect throughout the entire market, but it really is centered on those properties as it's going to be in these properties. And it's something you just want to consider because not a lot of people do consider it, and we face it in Florida as well. And you've seen it happen, and we'll talk a little bit about it because you got many people in here that have a tremendous amount of equity in their homes, and even if they're insured, okay, what happens is you're insured, they'll rebuild your house, but the dramatic loss of equity you have because of the land value, because no one's going to want to buy your house if it's getting hurt by fires or storms or whatnot. All right, markets continuing to accelerate. We got NASDAQ down 1.4%. S&P's off 50 points. Stay tuned, folks. I'm coming back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the NASDAQ down more than 300 points off 1.5%, 20,719. So talking about those houses, right? And, you know, the humanity aspect is all that matters right now. But as an investor, you look at it, the insurance market in Florida, you look at it for sure. And, you know, the prices in LA, the home equity that some of these people have, it's big numbers. You know, when you're dealing with these numbers that people have in terms of homes in that area that's priced at about 3.4 million. So they talk about one gentleman, Jim Papik, buys a home for $455,000 in 1988. Now, boy, that's a pricey price tag in 1988, but already back then, the Palisades is what they're talking about, okay? That home valued at $3.7 million before the fires, okay? And the tough part there is you're talking about potentially only an $800,000 to rebuild. Their mortgage, $2285. Now, here's what I didn't understand, and they always leave some stuff off, right? You got a mortgage out there, nonetheless, okay? What happens in instances like this, because we see it in Florida, is, and they're right, $800,000 to rebuild, okay? How far is that going to go in the Palisades with everybody rebuilding? And she's right. $800,000 is a lot of money if you live in Iowa. No offense to Iowa, she should say. But I'm going to build my home in the Palisades, and she should say I'm going to build it in the Palisades when everybody's going to be looking for contractors and prices are going to be going up. Doesn't mean you're necessarily price gouging, okay? But you better believe that people are not going to be doing jobs unless they think they're being adequately compensated, and it is always a tough game in terms of subcontractors. And I say tough game in terms of that's how the economy works, right? They're trying to maximize their value. You're trying to save as much money and get the job done as cheap as you can. That's how it works. The market finds where supply and demand equal, and that is where the price is. And yeah, that average value of the home, $3.4 million is the number there. Now, you want to see something here. Check this out. Okay. How long have people owned their homes? And this is where you're going to see. LA, the biggest number on this chart, man, almost 19 years. Median home ownership by tenure. You drop it down to an area like Tampa, okay? Now, there's many reasons why this is occurring, okay, in terms of areas getting decimated by the financial crisis, et cetera, or people who already had equity in their homes, like some of the examples we were talking about that stayed with their homes, but nonetheless, you're dealing with substantial people with substantial equity. And unfortunately, okay, you're just not diversified and you're not looking at the risks in that area. Yeah. And so it's something, you know, you look at home prices up more than 300% since 2000, the national average about 200%. You're just going to have a lot of people who have their entire nest egg in their homes, and it's a complete reset. They have no homes. The land value, it's something that is going to become more prevalent. We're seeing it. Yeah. And now the rents, right? Rents in LA going through the roof. People need places to stay. They talk about in this article that there's a 10% cap on what you can charge on rents during a period of crisis. Where is it? Yeah, somewhere in here. Yeah, there it is. California law bans rent increases of more than 10% during a state of emergency, which is going to be a cap because numbers are going to rise, especially when you're dealing with well-to-do areas, a lot of people with money to spend that need a home. And it's going to play out. But nonetheless, you're going to see these stories, and it's not going to be. There's going to be people who are uninsured, okay? But even if you're insured, that's the lesson to take away here. You better be preparing for what happens in the case of that insurance. You're going to get the ability to rebuild. Do you want to rebuild? If you rebuild, is it going to be worth the value? We're seeing this happen in St. Pete. And I'm not sure how you can be outside of a fire area, which is the tough part, right? You can. There's certain areas. We had some of the maps. Okay. But nonetheless, you can be out of the flood zones in Florida, and there has been a complete repricing. All right, markets in negative territory. We got the NASDAQ sitting basically where we kick things off about 266 points or 1.2%. We take a look at that gold contract. So gold on a daily basis. Doing so well, pretty much, right? Look at where we are. All we are is right back to where we were on September 26th. And folks, pull it up on your chart. Do you know where the dollar was on September 26th? Yeah, it was pushing at about 100, man. There it is, okay? There's September 26th. 100.50, we'll call it. You got gold basically just consolidating. So what has happened? You've had gold push higher on dollar weakness, okay? Again, right? You back up the dollar chart. When we had the dollar in April at 106 down to the 100, okay, you pull up gold. Gold in April, right? From the point of about 2260, we drive up to the September price point of 20, right where we are right now, almost 2700. Then all gold does is consolidate on that dollar strength, and we'll see if they can start trading rationally in terms of inverse, as they usually do, because they've been correlated recently. And we'll see if we can get that inverse relationship. If you ever get some dollar weakness, it's not coming yet, but I imagine it will come. Even on the spikes, folks, okay? We're sitting at 110, but keep in mind, even on the spike to 115, things will normalize in this dollar, okay? You're going to have Trump in there. He's decried a strong dollar before, and he's got a dollar at 110. He's got yields higher. Going to be very interesting to see how this weighs on the tariff debate and where we go from there, because you see gangbuster tariffs in this market. That's not going to lead to dollar weakness and lower yields and higher equity prices. Okay, you see tariffs that bring it, as the president has said. You're going to see extension of everything we have going on right now. You're going to see dollar strength. You're going to see higher yields, and you're going to see that weigh on equities. And we'll see if earnings can deliver in the face of that weighing on equities. Yeah. All right, what else we got going on here? Let's see. Yeah, this one, the online world, man. This is the stuff that AI's got to figure out, and I think they will. We talk of AI if they, but nonetheless, fake job postings are a real problem. How about 1 in 5? That is staggering, right? 1 in 5 ghost jobs, roles that companies advertise but have no intention of filling. Okay, yeah, the listings, of course. Companies have a number of nefarious and normal reasons for posting not quite real jobs. They want to suggest they're growing even when they aren't. May keep postings up in case they get a candidate who's too good to pass up. I mean, think about it, right? It's quite a minefield. Now, in the same way, we've talked about stories on this program before where you talk about people who apply to like 400 jobs and get no callbacks and they get denied. They apply at 2:30 in the morning. For those of you that watch the show, there was anecdotal, you apply at 2 in the morning, you're denied by 6 in the morning. You're not applying to like realistic jobs in that opinion, folks. You're probably applying to jobs that look a little sketchy. Okay, you're not getting real callbacks. You're not getting real interactions at all. But boy, when you start talking about people graduating, and here we go. Look at Of the more than 260 applications, he received 124 rejection letters and never heard back from 116 companies. 260 applications. Are all those jobs really fitting there? Maybe to a degree, but sometimes those numbers not exactly focused on a clear path. Stay tuned, folks. Markets in the red. We got one more segment. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets popping a bit from the open. NASDAQ 100 now off just 0.9%. S&P is off about 0.5%. The news out there. So U.S. Steel, maybe not selling it off to a foreign partner, but how about Cleveland-Cliffs partnering with Nucor in a potential bid for U.S. Steel? You got U.S. Steel. Their symbol is X, trading up by 7.1%. They put the number somewhere in the high 30s, is what they say in here. The offer would be in the high $30 a share. So what they're talking about, Cleveland-Cliffs and Nucor, a potential bid for U.S. Steel, not selling it to Japan's Nippon Steel that was just blocked by the White House, even though Nippon is still saying they're coming after it. Nonetheless, that news hitting, potential look for some volatility there throughout the day. All right, and where do we finish it off? Let's finish it off by taking a look at some of those banks that are coming up this week. So on Wednesday, pre-market, you get JP Morgan. Look at that pop, man, up by 1.5% right now, lining up for the expectations. Goldman Sachs up by a percentage as well. Wells Fargo up by 0.5%, and Citi. So those four, Wednesday prior to the market, among others. And then on Thursday prior to the market, you get Bank of America. That's negative by 0.1 right now in the red. And you get Morgan Stanley, among some others. Morgan Stanley flat right now as well. We jump around some of the big dogs. And as we mentioned, it's going to be the big dogs, right? We went over it. The earnings growth all coming basically from the Magnificent Seven this earnings season. We'll see if they can hold up the fort. Apple off 2.25%, man. You talk about some numbers. We jump over to NVIDIA. They pair some of the losses, only off by about 2.8% right now. Amazon, there you go. Amazon catches a bid in the green with the NASDAQ 100 off by 190 points right now. Microsoft shares off by 0.8%. Google off by 1.3%. You jump over to Meta. Mr. Zuckerberg bending the knee. Meta shares off by 1.6%. Interesting to see Meta critiquing the innovation of Apple. I have to say it. I mean, if anybody likes to buy their competition versus innovating, I mean, Facebook, come on. Instagram, Reels, Threads. Nonetheless, we'll finish there. Folks, thanks for kicking it off. We got our man Basil Chapman. He's back in the saddle. He's feeling great. He's next with the Tiger Technicians Hour. Have a great day, folks. We'll see you tomorrow.